Hello, I'm Jane Petty with Burke Herbert Bank, the oldest bank in the state of Virginia. In fact, this summer we're celebrating 169 years of service to the community. And one of the things we love doing is talking to people about managing money and becoming smart money users. So today we're going to talk about buying your first home. I know this can be frightening to some, but it can actually be exhilarating if you're armed with some good facts and some good advice. So I've invited the head of our mortgage department, John Tomasello, to be with us today and share some tips and advice for things to keep in mind if you want to become a homeowner soon. John?
Thank you, Jane. We do like getting people into their homes, especially first-time buyers. As lenders like to look at three things when we're trying to get you into the home. How much cash do you have? What does your credit look like? And do you qualify for the loan you're looking for or the loan you want? So let's jump right in and talk about the cash for just a second. Cash is the amount of down payment you need, plus the closing costs that you'll need to pay to get into the home. As an example, if you were purchasing a $350,000 home, your down payment on a first-time buyer is typically 3 to 5%. So 3% in our example is about $10,500. But you'll also need closing costs, which are typically 3 to 4% as well. So that's at least another $10,500. If we're smart, a lot of times we can get the seller to pay for the closing costs, but we will need that down payment. So let's talk about credit. There's a myth out there that you need a 750 credit score in order to qualify for a loan. That's not true. You do want to pull your credit report. It's free once a year from most of the bureaus, and see what's on your credit report to see that there's any inaccuracies or things that shouldn't be there. Your credit score is the financial picture into your finances, and we can show you what makes up your credit score in the next slide. How do you pay your debts? How much debt you have? What inquiries do you have? Are you looking for more credit? So those all go into your credit score. A typical credit score is about 660, but they range anywhere from 350 up to 800 plus. So just know what your score is and know that you don't have to have a 750 credit score to apply for a loan. The third thing is qualifying. This is probably the most important part. So what lenders look for is a debt to income ratio of 45% or less. That 45% represents your total mortgage payment, which is principal, interest, taxes, and insurance, plus any other debts that you might have, like a car loan or credit cards or student loans or things like that. So in our slide, in our example, our mortgage payment is about $2,000 a month. But let's say this customer has $800 of other debts, maybe a car loan or credit cards or whatever. So we take that $800, add it to your mortgage payment, and that gives us $2,800. So in order to find out how much income we need to qualify for this loan, we simply divide that by 0.45, which is 45%. And it shows us that we need about $6,200 a month or $74,000 a year of income to qualify for this payment. So what do you think of that, Jane?
Oh, that's some excellent advice, John. Thank you for sharing that. How about if you could tell us a little bit about someone who maybe is ready to buy right now and is interested in, what's the first step they should take?
The very first thing anybody should do, aside from checking your credit, is to call a lender. The lender will be able to take all the financial information you have. They'll collect your W-2s, your pay stubs, your bank statements. They'll talk to you and discuss your personal situation. And then what they can do is give you a pre-qualification letter that you can take to the seller to say, look, I've been pre-qualified by a lender. I can buy your home. So they'd be more willing to accept your offer than someone else's.
Great tip, John. Now, what about some of our viewers who are maybe a little younger, just getting out of school or getting that first job, but they want to be ready when they, they can buy the home? What should they do from now to help them get ready to buy in several years?
So the obvious thing is the hardest thing to do for anybody buying a home is to show they have enough cash to buy. It's not the credit and it's not the qualifying, it's having the cash. So start a savings plan now. You can possibly increase your income, but that's really difficult to do unless you're working a second job or you're expecting a promotion or maybe bonus income or something like that. So the easiest things to do are, number one, start setting aside money, cut out the things that you don't really have to have. If you're serious about buying a home down the road, do you really need to eat out every other night? Do you have to have that cup of coffee with Starbucks every morning? These are things that add up. What about the gas money that you're not spending while working at home during this environment? So put that money aside and you'll be surprised how fast it adds up, especially with the compounding.
Well, thank you, John. That sounds like home buying can be as easy as CCQ, cash, credit, qualify. So keep those things in mind and come and see us if you need help or want to talk about it further. Thank you, John. We really appreciate your sharing some of your wisdom today.
Thank you, Jane.